Hello everyone, welcome back to my channel. Today we will know what is the stock market and how does it work? If you are interested in stock market and thinking to invest, then stay till the end to know all the informations. Investing in the stock market is a good way to build wealth over time, but it can feel a little intimidating to get started. Understanding how the market works, the type of investments you can purchase through it, and your risk tolerance can help alleviate that stress. Here's a primer on the stock market, along with some insights from personal finance and investing experts. What are stocks? Holding stocks, also known as shares or equities, means you have fractional ownership of a company traded on the stock market. It entitles you to benefit from the company's earnings, through dividends and/or appreciation in the stock price. There are two types of stocks, which afford investors different rights. Common shares give the holder the right to vote on company matters such as a major acquisition or new board of director appointments. However, not all common shares pay dividends, through which the company's earnings are distributed to shareholders. Even with those that do, dividend payouts can vary and are dependent on the company's profitability. Holders of preferred shares, on the other hand, do not have voting rights but receive fixed dividend payouts each quarter and are paid ahead of common shareholders. If the company goes bankrupt, preferred shareholders would have a higher claim on its assets. Companies will issue stock when they need to raise funds to finance business growth. They will also sometimes buy back shares if they want to create additional value for shareholders. With fewer shares available on the market, the company effectively boosts demand, and therefore the stock's price. What is the stock market and how does it work? The stock market is a giant marketplace for purchasing and selling stocks. Though people often call individual exchanges the stock market, it isn't so much a singular entity as it is a collection of exchanges around the world. Unlike decades ago when traders made sell and buy orders on the trading room floor, today trading is done mostly electronically and some exchanges have closed their trading halls altogether. The first stock market-like institution was founded in Antwerp in 1531, though, at the time, it only dealt with business, government and individual debt, rather than shares in companies. Buying company stock emerged in the 1600s, when England, the Netherlands and France began trading with the East Indies. The long ocean voyages were expensive, and so explorers and merchants formed limited liability companies to raise funds from investors, who would receive a chunk of the profits proportionate to their investment. Today, the largest stock exchange is the New York Stock Exchange, with a market capitalization of $27.6 trillion at year-end 2021. Market capitalization is the total value of the outstanding shares of all the companies on the exchange. TMX Group Limited, a publicly traded company, operates the TSX, Venture and Montreal exchanges. TMX Group stock exchanges collectively rank 10th in the world by market cap, at $3.3 trillion. Companies can be listed on multiple exchanges, and Canadian investors can purchase shares in companies listed on foreign exchanges. You can do this directly through your broker or online brokerage, but remember the transaction must be done in the relevant foreign currency, so if the exchange rate moves against you, your returns can suffer. You can also buy through Canadian depository receipts. CDRs represent shares of global companies but are traded in Canadian dollars on Canadian stock exchanges. They also enable you to buy fractional shares, making companies with high stock prices far more accessible. How can I invest in the stock market? There are three main ways to put your money in the market. You can work with a licensed professional, go through an online brokerage, or use a robo-advisor. For guidance, hire an advisor or broker. If you want guidance, you can work with a licensed financial advisor or broker to purchase stocks. Only those licensed by the Investment Industry Regulatory Organization of Canada can trade on your behalf. Advisors licensed by the Mutual Fund Dealers Association of Canada can sell you a mutual fund, another way to gain exposure to the stock market, but can't buy or sell securities for you. For a DIY approach, use an online brokerage. You can also set up an account with an online brokerage. They've seen a surge in popularity since 2020. A survey from Royal Bank of Canada in February 2022 found that 48% of Canadian do-it-yourself investors between the ages of 18 and 34 started investing after the onset of the pandemic. Lisa Kramer, a finance professor at the University of Toronto's Rotman School of Management, Noted that investors should be aware that not all ETFs are balanced or diversified. While some track the overall Canadian or US stock markets or a combination of different countries' stock exchanges by holding a wide array of stocks, others are focused on one sector or region, which can be riskier. Investors can also purchase ETFs tied to the price of gold or to one or more cryptocurrency. I will talk about more in the other videos, so make sure you subscribe to my channel for upcoming videos. Thank you for watching.